Good evening, everybody. It's time for our weekly recap and weekly preview. It is Sunday, 8:48 p.m., August 14th, 2016. Excuse me. I am your host for the evening, the CEO of GAR Capital, Carlos Garcia. And welcome, everybody. Thank you for joining me this evening. We're just going to go ahead and get right away into it. We'll go ahead and start with our website. I just want to say thank you to all who have signed up for the 48-hour free trial, and to all my Signal service subscribers. We really do appreciate you. So let's go ahead and get started. First thing I want to go ahead and do is take a look at the current time. Tokyo and Sydney is open for trading. We have about 8 hours left in Tokyo, 5 hours left in Sydney. So let's take a look right now first at the current prices. So let's go ahead. Let's go ahead and go to the website. I guess I should have had this open to begin with. I apologize. Set up and open a separate window. Let's get ahead and get a spot check on the current prices. All right, right now we are at 111.59 on the euro dollar, 129.12 on the pound dollar. Dollar yen's up today, not much, 101.32. So Sundays the volume is a little lower. Aussie dollar's down a little bit, 76.43 is the bid, ask is 76.44. And Canadian dollar is up today, at the moment at 129.67. Looks like dollar is gaining a little steam at this juncture. Not much to make a noise about. As you know, Sunday is a low volume session. So let's go ahead and go over the first thing. We had the Japanese GDP second quarter was at 0.0%. The estimate was at 0.2%. So not exactly good news out of Japan, but not much to say anyways from the Japanese. But the yen has been the strongest currency in regards to strength against other currencies in 2016. If you remember back in 2015, dollar yen was trading around 120 to 123. We are now at 101.32. So that should give you just a sense of how volatile it's been the last 12 months or so. So first thing I want to go to is the economic calendar for the week ahead. We had our GDP information come out from Japan. Tomorrow is a bank holiday in Italy, South Korea, and India. Nothing that we need to be worried about. Let's go ahead and change this times here to Eastern. This is all available for the website for all Signal users and website subscribers. Tomorrow we have a couple of inflationary data coming from Switzerland. We got some US data, 3-month bill auction, not really much going on in general tomorrow. Only thing I'm looking at tomorrow, honestly, is the Australian monetary policy, the meeting minutes. And that's tomorrow around 9:30 p.m. We'll take a look at the trades that will be affected by that information, and we'll continue that going forward. So just keep in mind, tomorrow is the Aussie monetary policy meeting minutes, Royal Bank of Australia. We'll go ahead and continue with Tuesday. We got some core CPI from Great Britain year over year. We got some inflationary data all around from Great Britain. And we got the German economic sentiment coming out of Europe. Also got employment change PPI coming from New Zealand around 6:45, and the Canadian information manufacturing sales. We got core CPI and CPI, and a leading indicator of building permits in the United States at 8:30 in the morning. That'll be on Tuesday morning. Some inflationary data to see exactly what the Fed may give us a little bit of a spotlight on what the Fed might do. Personal opinion, I don't see them raising rates. We're going to go ahead and take a look at last week's as well, with the retail sales number being completely missed. Just a big whiff, and and the dollar was hammered, but yet it made it come back. With that being said, we're going to continue to Wednesday. Wednesday, let me see if I'm on Wednesday here. Wednesday, here we go. Wednesday we have average earnings, claim and count change, and we have crude oil inventories. That's every Wednesday at 10:30. We have Federal Open Market Committee's meeting minutes at 2 p.m. Where I give us a little bit of an insight of what they are going to do. So that's why the inflationary data is so important on Tuesday to keep an eye on in regards to the U.S. economy and monetary policy. We also have an unemployment rate coming out of Australia. As you know, last week, I believe it was 2 weeks ago or last week, 2 weeks ago, that we had the Australian, or a week ago, my apologies, in regards to the interest rate cut from Australia. That was 2 weeks ago. The New Zealand cut we had, I believe, last week. So the Aussie has been gaining strength since then. We just want to take a look at more economic data to see if that will still hold up with the Aussie dollar in regards to what they will continue to do if there's more cuts in place. Continuing here, Thursday, of course, we have unemployment count. As always, we got retail sales coming out of Great Britain at 4:30 in the morning. And on Friday, core CPI and core retail sales, coming out of Canada, as you can see here. That's something that we do need to look at. So retail sales week looks like, and that's something that we do want to look at in general to give us an insight on what central banks are going to do and how currencies are going to be affected. Every Wednesday, we always want to look at oil inventories as WTI is affected directly, and of course the inverse correlation on dollar Canadian dollar. So let's start looking at some charts. All right, I'm looking here at a euro dollar daily. You see what I see? I do see a bearish trend here, and I have been short that position for a while now. I am expecting a more of a drop as we look at the dollar index, DXY. Go and take a look at it. We're seeing a little bit of a range, but still a bullish trend in regards to a daily. Why am I looking at a daily? I definitely want to see longer term moves as we are swing traders. So that's something that I want to see. The only currency that I have seen that's been stronger than the dollar long term has been the yen. I mean, you could see this here. We want to stretch it out a little more. Look at a 4-hour chart. I mean, we've already hit that downward trend here, and we have been a little bit of a range. Right after the midst of the retail sales number, we had a little bit of a bounce. But right here, the resistance point on a 4-hour chart has been around 101, 180. Has yet to break. We've broken 100, but 100 seems to be the second or third resistance point here on this chart. But we'll keep it looking at the daily. I mean, we do see still more of a bearish trend. Even with the dollar index rising, the yen has just been stronger all around due to risk offset sentiment all around. When the Fed cuts rates, or when the Fed didn't cut rates, when any central bank cuts rates, the yen tends to pop. I mean, we could take a look at gold exchange, XAU, USD. We look at gold, same thing here. I mean, you can see what I'm seeing here. Since monetary policy has shown any kind of no change, we have seen just pops in gold against the dollar. I am still currently looking at gold placing higher as more money is injected into different economies such as the euro and Great Britain, Australia, New Zealand. So gold to me is still a great play. And we're going to take a look at US oil. WTI, as you can see here, on a daily, a little bit of a resistance point short term around 39.50. We're still rising here a little bit at 44.83. Do I expect it to rise a little bit more? Yeah, I do expect us to hit 46 as long as we can get a little more, less demand. But long term, I'm still bearish on oil, as we could see here. I do see a little bit of a pop as inventories tend to sink a little bit, more of OPEC talk, maybe some little bit of cuts here and there as the as the dollar actually rises a bit with the DXY as we looked, we're going to expect to see oil drop accordingly. The price, well, is correlated to the dollar as it is priced in dollars, and as long as a strong dollar continues, oil will drop continuously, but we have been popped back from the February lows around 26 a barrel. But again, on the daily chart, I do see still a little bit of a bearish trend. If I had to make a call on the bottom, I would say the bottom is right around 38. Oh, let me get that. Right around 38 is my bottom call, and we're already above that. So I would say, support point. In my last chart, I said resistance support point, Support point would be around 38, and right over here would be our resistance point around 46 if we do hit this pivot point here and go back down long term. So let's go ahead and take a look at other charts such as Aussie dollar. Aussie dollar, you do see we're looking long term again as swing traders. We're already kind of pushing a little bit of the top here around 77.56, 77, right above 77 seems to be kind of the ceiling. And if we're looking just on trends here on a daily, definitely bullish, but I'm expecting a drop as the DXY, the dollar index, to drop accordingly. And you can already see on an hourly how that's been dropping. Even after the retail sales, the US dollar has been a bit resilient. The US economy in general is probably the best looking house in a bad neighborhood. Now, what does that mean? With everything going on in regards to economic policy, cutting rates, low GDPs, staggered growth, the United States isn't exactly doing great, but it's doing a lot better than the other economies in general. So that makes the dollar more attractive. It makes all other currencies stagnate according to that. As you can see, in our charts, we've seen how the dollar has been playing out long term against these currencies. Other than the Aussie dollar, which has been a little bit of a bounce back, but I can correlate that a little bit to gold and how gold has risen and the Australian gold mines, and that's a little bit of a correlation. Not exactly to the T as you would have US dollar against Canadian dollar and US oil, but again, that does a little bit of a correlation, gold and Australian dollar, and the Australian dollar has been resilient against it. Another trade I'm looking at is Kiwi yen on the hourly chart. Look at here, we have a little bit of a drop off from 50. We were expecting from my past Instagram feed that the Kiwi would cut about 50 basis points from the central bank funds rate. It will came out to 25 basis points. This shot up the Kiwi up to around 74.30, but it didn't settle on the hourly candle, so it kind of ranged a little bit around 73.57, and then we went ahead and I still had open position, but I went into my personal account and shorted at 73.50 and have been doing pretty well since. I'm still holding longer term since the yen is still strong, and as you can see on a daily, how we're seeing the trend is going still to the downside. Lower highs and lower lows. Can't find the trend here. So again, yen is still something I'm more bullish on the yen, meaning I do think it's going to get stronger. I do like a couple of pairs such as, pound yen. You can't really go wrong with pound yen since even before Brexit, the yen has been strong. We have the Brexit drop here, but again, with all the data coming up, the yen is still the power play here due to the risk adverseness of traders and institutions and economies. The yen is still the main go-to currency in order to shove away risk and to kind of keep inflationary pressures down against commodities. But commodity plays would still be my number one. Gold, silver would be long term. I like the dollar, I like the yen. Those are my 4 plays that I do like. For the week, I like pound yen on the short side, euro dollar on the short side. Let's look at dollar Canadian dollar. Dollar Canadian dollar, I'm gonna be kind of neutral on right now. Kiwi yen, up to the downside. Anything yen related, I like to the downside. Any kind of those pairs. The only play I would want to see is dollar, as we showed earlier, the dollar index. I definitely expect that to rise. I want to see if the Fed gives a little bit of a hint of maybe not increasing of a rate hike per se this year, but to show monetary policy is easing to more of a bullish, excuse me, a hawkish tone. Hawkish meaning raising rates, cutting money supply. That's what we want to see. Again, it's almost like buy the rumor, sell the news, that sort of thing. So if we kind of get a more of a hawkish tone from the Federal Reserve, Janet Yellen, FOMC committee, I do expect the dollar to shoot up against other currencies, especially euro dollar. Personally, I do expect it. I do see the euro dollar as a little bit overpriced right now from the highs at around 115. The highs from 112, over 112, and right now we're at 111.55. I do expect it to be in the lower side this week, and those are my plays right now. So to reiterate, metals, dollar and yen, and short euro dollar, short pound yen. Those are kind of my plays and the things I'm looking at the moment. So the past week, we really didn't have much going on. We're still in a holding pattern with a lot of trades. Again, just because we're not trading in and out, we're not scalping, doesn't mean we're not working. We're always looking for the best low risk trades to look at, wide stops, wide profit taking, to make sure that we don't need to be staring at the screen all day. So that's the way we do things here. We still keep in communication with our clients, make sure they know what exactly our targets are, what our goals are. So we're gonna go ahead and leave it there, guys. We'll see you on Wednesday for our market wrap up. I still have the 48-hour free trial session of our website, jarcapitalfx.com. A lot of great things coming up, and I appreciate you coming and joining me this evening. We're expecting a great week ahead. So again, if you have any questions, feel free to email me directly. That's garcapital@gmail.com. And everyone have a great evening. Thank you for joining me, and I'll see you guys Wednesday for the midweek update. All right, have a great day, y'all. Thank you.